my YouTube channel. This is Joanna Nin with the Prosperous Agency. I love seeing you here. We are happy to talk to you today about types of loans, anything from FHA, conventional, USDA, anything that you might be interested in if you are considering coming to the North Carolina area or if you are here already. So stay tuned. Back. Today I'm here with Mr. Johan Alvarez with Altera Home Loans. He's actually the cool guy. He's the branch manager. Don't tell anyone. Welcome.
Johanna, thanks so much for having me back here. It's fun to be back, and thanks so much for watching.
Yes, he and I go back quite some years. We've served hundreds of families with their relocation needs, with their home purchase needs, and we are here to educate you. We're trying our best to be as interesting as possible, so bear with us. There's a lot of stuff happening, a lot of changes, especially with COVID, and I would like Johan to talk to you about the loans that are more popular, what's happening in this area, what's happening with the rates and all of that. So without further ado, Johan, what is happening? What type of loans do you see are the ones that are most popular, especially for the area?
Yeah, so let's start with the biggest question, right, about rates.
Yeah.
So we're in the fourth quarter of the year. Time is definitely flying, Joanna. I can't believe it.
Yeah.
But the holidays are
Christmas.
right around the corner. Hopefully everyone can find their gifts and everything that they need because of the supply chain.
Don't go to Walgreens.
Who knows if we're going to find anything, right?
There.
Yeah, so also because of that, we're seeing that pricing continues to go up, not just with resale homes, but maybe new construction.
Yeah.
Rates are following suit. So rates are also starting to tick up. In the beginning of the year, middle of the year, we were seeing rates somewhere in the high 2s, low 3s. Now they're definitely in the low 3s. If the client has great credit, we could still probably find something in the high 2s, low 3s, especially in a 30-year mortgage. But we are seeing some change with the rates, and we don't know where they're going. We know that there's a lot of talk with the Federal Reserve and the government with easing some of these COVID requirements. But if you're out there and haven't bought your home yet, this is still a good time. Rents are also increasing, so when you're looking at comparing rent and home ownership, this definitely makes sense, Joanna, especially in this area of North Carolina where it's so affordable.
Yeah,
and we're
you
seeing
can pay
people
$2,000, $2,500 in rent, and you could pay the same in a house. So it really doesn't make sense to rent, in my opinion.
Yeah, I mean, I guess if you're looking to be here for a while and you're not moving anywhere out of the state or out of the country, then definitely buy your home. It's a great investment. This area is growing, so that's what we're seeing on the rates and on programs. Something that's very important, interesting is when you go to a bank, you're not just applying for money, right? You're not just applying for money or a loan to buy a home. What you need to know is that you're actually applying for a program that has specific rules and guidelines. And if you don't fit the box per se, right, then you may not qualify, or you may start hearing about programs that you've probably not heard about before and start hearing about requirements which you may or may not be prepared for. So this video is for you if you are not aware of the different programs, and thank you so much, Joanna, for this opportunity. So
absolutely,
the most popular program is probably going to be the conventional loan.
Right.
All right, so if the seller of the home is not accepting cash and they're accepting an offer with financing, they're most likely going to look at a conventional loan. The conventional loan tends to be a little bit easier to work with, a little bit harder to qualify for, which is really the main reason why a lot of the sellers want to accept a conventional loan, because they know that if you qualify for conventional, they're probably accepting an offer from a better financing candidate than someone else that's getting a different type of loan. It's not to say that those loans are not good, it's just that they know that the rules are a little bit tighter, and the fact that you're qualifying for that program makes you, in their eyes, a better buyer for their property. All right? And some requirements with appraisals that could be a little bit more flexible. So, there's some items that you're going to have to talk to your loan officer about in detail, but just know that the conventional loan is probably going to be the best option. The other thing to know about conventional is that there is a limit on the amount of money that you can finance. For example, here in North Carolina, that limit is $548,250. For now. Now in 2 months, that limit is changing. It's going to be increasing, and actually some lenders are increasing that limit. But by the time we're doing this video, they haven't officially increased yet. But depending on where you go, you're going to notice that that limit may be different. So definitely check with different lenders because the limit may not be updated, especially with the banks. They're probably going to take a little bit longer. Sometimes a lot of them are more conservative, so they want to wait for an official announcement before they make that change. With an independent mortgage company like us, we can make those decisions a little bit quicker, and so just make sure that you're aware of that some lenders may have different rules.
Do you have the number as to where they're increasing?
So 625,
625,
right, is the limit where a lot of lenders are comfortable with increasing that bar, right, that limit.
Right.
But it's not an official limit yet. We haven't received the announcement from the Federal Housing Finance Agency.
Not official yet.
So it could be higher. You know, once that announcement comes in a few days, it could be higher. But 625 seems to be the comfort level.
And excuse me for interrupting you, but you did mention that it is a harder loan to qualify for a program. So why is that?
Alright, so there's a few things. The first is that the credit score is going to impact the payment a little bit harder than on, for example, an FHA program. The reason is because if you're doing less than 20% down, you're going to have mortgage insurance. That mortgage insurance, when we price it out, it's based on a few things, but the credit score is one of them, okay? And if your credit score is below 680, that mortgage insurance tends to be a little bit more expensive than compared to FHA.
Got it.
Also, the interest rate seems to be a little bit higher if your credit score is not above 680. So the payment is higher. So if you have limited income, or if you have X amount of income, yeah, your debt to income may be a little bit higher with that conventional loan if you don't meet that 680 credit score.
Right. So you're gonna hear a lot of terms that you need to get used to, and feel free to connect with him and say, what is debt to income? You know, what does that mean? Which means, you know, you have this income per year or per month. They look at how much, let's say, is your car payment, if you have any student loans, if you have any type of payments that are recurring every month. So this is how they look at what program you qualify for, right? So the biggest mistake a lot of people do is they look online and they say, well, the interest rates are, you know, 3.9, is in 3.9, but truly your rate might not be 3.9. Yours might be lower, or it might be higher, depending on the debt to income ratio and your specific situation. So
and the program too.
Yeah, and the programs and the banks and all that. So going back to the type of loan, so conventional is the most popular.
Conventional is the most popular. The second most popular may be a jumbo, especially now that pricing is increasing and you have to borrow more money. The jumbo may be the second most popular option. And something important for you to know is that not every bank has the same requirements for jumbo programs. Those are typically loans that are held in the bank's balance sheet, so the rules are set by the bank, and depending on where you go, the rules can be different. Okay? So jumbo, then it's government programs. Government programs will consist of FHA, USDA, and VA loans. So FHA is probably going to be another popular program.
It's very popular for first-time home buyers.
That's right, because they only require 3.5% down. They're going to give you a better rate if your credit is below 680. And we can actually go down to 600. Other lenders may go down to 580. There are some requirements if you're going below 600. But the important thing to know is that they're more flexible, they're more lenient, and they don't impact the credit, the credit score doesn't impact the rate or the mortgage insurance. The mortgage insurance is pretty much standard for anyone, independent of their credit score. So FHA, USDA is also popular. Now the USDA is going to be...
rural areas, that's the USDA.
Yes, USDA is going to be a little bit more difficult to qualify for because geographic location is going to be one item to meet.
Yeah, so if you want to go out there, that's perfectly fine.
Second is going to be income limits. So depending on the county, they will have income limits, and depending on family household, right, there's going to be a limit as to how much the family as a whole can earn, even if they're not applying for the loan.
Right.
So there's different requirements that they have that you may not see with a conventional or FHA. And then the VA. The VA is a great program. They tend to be very popular where military bases are, or where We have a lot of veterans, so if you're a veteran or active duty, you could definitely qualify for a VA loan. It's an awesome program and can definitely help you obtain a home with very low money down, zero money down really. You could get 100% financing. It doesn't require mortgage insurance, and the rates are really, really well priced. So definitely a good program. So those are really the most popular. Now, if you go to a credit union or if you go to a bank, they may have their own niche programs. So you've heard of some doctor programs, right? You've heard of a credit union offering 100% financing, or another bank offering 100% financing. And it's because it's their money. It's a portfolio type of loan where they make the rules, they lend based on the rules that they create. So if you meet those parameters, you can go to that institution and obtain a mortgage, but it doesn't mean that you're going to obtain that same program with a different bank or another mortgage company. So they do exist, and it's a good idea to do some research online or in person at the banks because they may have some programs that other companies don't have.
How about HELOC?
Yeah.
Can you tell me a little bit about that?
So HELOC it's a home equity line of credit for those that are not familiar with that term. So home equity line of credit is great, and the home equity line of credit is very popular for those that already have a home that may have some equity, especially what we're seeing right now. A lot of people don't want to sell. They want to keep their home, but maybe they bought a home that needs some work, or it's just deferred work that they haven't done. So this is a good time to take out a home equity line of credit. The best option for a home equity line of credit may be a regional bank or a bank. They may be more competitive with their terms, so the rate may be a little bit more competitive. The amount of money that you can access from the equity of your home may be different depending on the bank that you go with. But it allows you to tap into some equity to either fix your home, or at some point in the future to maybe invest in a different property. If you're looking to buy an investment home, go on vacation, buy a car, or put your kids through college, whatever you need the money for, it's your equity.
It's very popular right now. A lot of people are calling us about that. That's why I really wanted to touch base. Normally it wouldn't be something that I would touch on because I would like to do a completely different video on the process and all that, and I will do that as well. But I just wanted to touch on this real quick in case you are a home seller and you are interested in those type of loans as well. So we can definitely assist both home buyers and home sellers determine their financial situation and how much money they can maybe pull out of their equity, because right now a lot of you do have a lot of equity, especially if you've owned the house for at least like a good, even a year or 2 years, right? So many things have changed with the pricing. So yeah, I think we are good for now. We've bored you?
Well, if you want more details, if you're in the market right now and you want some help on how to navigate this, reach out to Joanna, reach out to myself, and we'll be happy to talk to you about this. And if you're not in this market, well, maybe we can connect you with someone that is in your local market that may be able to help you, or maybe answer some general questions.
Absolutely. Thank you again for watching. Don't forget to subscribe and to comment and ask questions. We are open to positive, negative feedback, anything that you might have. If we haven't touched on anything, please let me know. Again, my information is there. Thank you. Have a beautiful rest of your day. Thank you, Johan.
Thanks, Joanna.